Our next guest says the outlook for the economy and for corporate America are strong and even sees a rate cut delay as a positive because it keeps more dry powder for the future, which can lengthen the market cycle. For more, we're joined by John Porter, CIO and head of equity at Newton Investment Management. John, welcome. Good to have you with us. Among the other things, well, why don't we start with the interest rate argument here? You're putting on your positive hat and saying that if we don't get 6 cuts, we don't get 3, we might get 2, we might get 1. It's all good. Why?
Well, I wouldn't necessarily say it's all good, but I think it's generally pretty favorable because I think you have to look at the reasons why the rate cut's been delayed. And a lot of it's because the economy continues to be so strong. I mean, we're looking at a first quarter GDP print we'll see later this week that's probably going to approach 3%. The market's not exactly demanding rate cuts to fuel economic growth. Admittedly, inflation isn't coming in quite as fast as some market participants were expecting at the beginning of the year. But inflation does continue to improve, and I think the outlook is when, not if, that we're going to see rate cuts. And I don't mind seeing them delayed because, as you said, I think that provides fuel for later this year and into 2025 even.
Yeah, the assumption is that they're coming. How many? Well, who knows? But they're coming, and the market seems willing at least to tolerate that. Among the things you say, it says here in my notes, thoughts from John, small cap valuations seem very attractive relative to large cap, at least a 15-plus year low. It's been this way for a long time. So why would I think anything's going to change here and that small caps are going to have their day in the sun?
Well, that's the exact right question. Why should anything change? And I think until you see the fundamental backdrop change, nothing will change. Part of the reason why small caps are at such a discount relative to large caps is because the large caps have been driving the earnings narrative in the broader market, and the small caps have been lagging. Certainly the last 5 or 6 quarters, large cap stocks have outgrown small cap stocks by close to 1,000 basis points per quarter on a year-over-year basis. And as long as that continues, large cap is going to be where the money's going to flow in the market. Now, we see a broadening out of the economy, a broadening out of the market, possibly happening in the second half of the year based on current forecasts. Small cap earnings should be growing faster than large caps in the second half of 2024. And if that plays out, particularly where valuations are, we think small caps are poised for quite the catch-up rally. But we need that fundamental catalyst of earnings improvement to be the driver.
2 sectors you like right now are energy and small cap healthcare. Explain.
Yeah, in the small cap world, I just see a lot of innovation happening in small cap healthcare, particularly when I compare it to technology. Down in cap, the small cap technology companies aren't really driving the innovation. We're certainly seeing that led by the mega cap companies. On the healthcare side, though, the small cap companies are where the innovation engine really exists. And we're seeing the new products come out of the small cap healthcare companies. And you're seeing large cap healthcare companies having to dip down into small cap to make acquisitions to fuel their own growth. The other area I like is energy. Now, I've liked energy for a while. I think energy is very attractive because of the capital discipline we're seeing from companies. It's a new environment for energy companies. They're much smarter about capital allocation. They're going to dividends and share repurchases, not speculative investments in the ground. At the same time, the strong economy we're seeing is improving the supply picture, the demand picture, while supply continues to be constrained. So I think that the setup for energy in 2024 is very attractive.
All right, John Porter, thank you very much. We'll have you back soon. Appreciate it.